Is that a corrective Elliott wave? Is that a corrective Elliott wave? We are on a monthly chart of reinsurance group of AM. The epic is RGA. This is a Russell 1000 component. And we want to answer a specific question. Is that a corrective Elliott wave? All right. So I know that when traders are counting Elliott wave, very often they are asking that specific question. Is that, okay, is that a corrective Elliott wave? All right. So first thing first, all right. So whenever you ask that question, is that a corrective Elliott wave? Okay. The next thing that you have to ask is that the next question that you must ask is this: what is the correcting? All right. So the question I'm asking you today is this: is that a corrective Elliott wave? So we are paying attention to the price action between the two red vertical lines. See, right? So this is the price action we are talking about. Is that a corrective Elliott wave? Now the next question that we must ask: what is the correcting? Okay, so a corrective wave must correct an impulsive wave. All right, so which impulsive wave is correcting? So let's play around with this question. If this is truly a corrective wave, it will be correcting, okay, an impulsive wave. Is there an impulsive wave that this corrective wave, or that's supposed to be a corrective wave, is correcting? If there is no impulsive wave that corrective wave is correcting, is not a corrective wave. So what is the big difference between a corrective wave and an impulsive wave? Because traders very often, okay, will the biggest Elliott wave mistake that one can make is to take a corrective wave for an impulsive wave. In my view, I think that's the biggest Elliott wave mistake, when one is calling a corrective wave as an impulsive wave. But it's happening all the time, and sometimes traders do not even know that there is. They are making one of the biggest Elliott wave analysis mistakes. All right. So look at this. Okay, I'm going to give you again. All right, 30 seconds, and you will tell me whether the price action between these two vertical lines, okay, is a corrective wave. So your time is starting now, and you got 30 seconds. Okay, I want you to focus on this session only. Is that a corrective wave? And I will be happy to see your comments in the comment section. All right. So I'm giving you more seconds. So then I will put you out of your misery, so to speak, and we will start discussing. All right. Okay, I think the 30 seconds is gone now. Okay. All right. So what have we seen? Okay, is that a corrective wave or an impulsive wave? The price action between the two red vertical line. Okay. So if it is a corrective wave, what is it correcting? Okay. If it's not a corrective wave, what is it then? Is it an impulsive wave? So according to the Elliott wave principle, all right, an impulsive wave is usually subdivided, the internal wave, at 1, 2, 3, 4, 5. The second wave should not cancel the first wave, and the fourth wave should not overlap the first wave. This is the price structure of an impulsive wave. Alright? But sometimes traders can get confused, especially when we are talking about the zigzag pattern, alright? So the structure of the zigzag pattern is 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. So a part of the zigzag pattern can lead trader to believe that they are dealing with an impulsive wave. Okay. There is another wave pattern, it's the flat correction. So the internal waves of the flat correction are 1, 2, 3, 1, 2, 3, which those are double retracement, plus 1, 2, 3, 4, 5. So the C for Charlie, the C part of the flat correction can also lead traders to think that they are dealing with an impulsive wave because they have 5 internal waves. But in that case, we are dealing with a correction. All right. Another way that we can differentiate a correction and an impulsive wave is that the impulsive wave very often will be either in a rising channel or a declining channel. But one more time, don't get confused when you are dealing with a zigzag pattern and or a sharp correction, or the sharp correction usually is in a vertical channel, all right? When you are dealing with a zigzag pattern and a flat correction. But generally, all right, the impulsive wave will be in a rising channel or a declining channel. If we are in a downtrend, we'll have a declining channel. If you are in an uptrend, we will have a rising channel for all the impulsive wave. On the other hand, the correction, we can have a correction in the form of a triangle. Remember that a correction can be in the form of a triangle. A correction can also be a normal consolidation, which is horizontal. All right. Sometimes we have what we call a slanted correction, when the consolidation is not horizontal, but it's a little bit diverging from the vertical and the horizontal line. So you may have a correction like this instead of having a consolidation in horizontal position. You may have a consolidation like this, and then a breakout, and the price goes up. In that case, the price is not trending down. You may see that the price may say 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. It's not trending down. It's a correction, but that correction is in a channel that looks like a declining, but it's a correction itself. But it's a consolidation that is taking place in a slanted channel. All right. So if we are talking about correction, we are thinking of a triangle or normal horizontal channel. All right. So different type of correction: expanding triangle, descending triangle, ascending triangle, contracting triangle. Those are corrections. We also have zigzag pattern. All right. The flat corrections, all right? So there are 13 specific Elliott wave pattern. You can, YouTube search and Google search all those patterns, all right? And we want to know which pattern are we having now, all right? So going back to the question that we are trying to answer today, is that a corrective wave? So with all the discussion that we have so far, can you look again at this chart and tell me whether this is a correction or an impulsive wave? Well, let's zoom into it a bit. Hopefully that will be helpful to you, so you may get the correct answer. Look within the two, between the two red lines. Is that a correction? I will put you out of your misery, so to speak. All right. So tell me now. So, in my view, this is a correction. All right. It's a correction. So if you get it right, you can upload yourself. All right. It's a correction. Why is it a correction? Feel free to disagree with me. So sometimes they may say, George, we have, can't you see, George? We have an Elliott wave cycle, and we have a correction here, George. Can't you see? Here it is. And then the stock went up, yes or no? It went up and it displayed a new high. And then we have again a correction, George. Can't you see that this one here is a trending phase followed by a correction? how can you say that the price action between the two vertical lines is a correction? Okay? All right? So a trader may see that there's a price move, correction, price a trending phase, correction. Now we are again in a trending phase, and soon we'll have a correction. Why am I saying that the price action between the two red lines is a correction? Okay, let's go back again. The first thing that I say to traders that trader must not forget is this: that if a bullish trend is forming, okay, is developing, all right, the first challenge for that bullish trend is which level? The 138.2% Fibonacci extension level of the prior trend. So if I apply Fibonacci extension to the prior trend, which is this one here, from here to here, the 138.2% Fibonacci extension level is this one here. I also recorded a video recently. I think the title was, is that, okay, an Elliott wave is that a trap for an Elliott wave trader? Okay, there's a video like now. I recorded I was talking about that level. And very often trader will think that this is a trending phase, but it is not. It is in fact, okay, a correction. Now you need to be careful. It's not because the stock did stop at 138.2% that make it a correction. All right. But if you look at this, the price went up quite strongly here. Let's zoom into it. Can we zoom into that section? See? It was quite a strong bullish progression up to this point. All right. And then, okay, a correction has begun. So the price, you see, went down 1, 2, 3 down. And then it went up a bit, pulled back. Now it went up to 138.2%. Fibonacci retracement level. Will you agree, my friend? Look carefully. Will you agree that the price went down like this, like a child, without lying? Okay. There was this candle up and then down. Will you agree that? Okay, if you agree, let's move on. Will you agree that the price went up to this point? If you do, let's move on. And then will you also agree that the price went down from here all the way here? I think so. Many traders will agree, 70% of you. And then will you agree that the price went up all the way here? So what are the internal waves? You can see that we have a bullish trend, 1, 2, 3, 1, 2, 3, bringing the price to which level? All right? Here we are here. Remember, we are here. This is the line I'm talking about. So 1, 2, 3, 1, 2, 3, bringing the price to 138.2% Fibonacci retracement level. Which corrective wave is that? Did you get it? It's the flat correction. This is the expanded flat correction. So what do we see? What's the internal wave? So we have 1, 2, 3, 1, 2, 3. Now we should have what? 1, 2, 3, 4, 5 down. Okay? That's what we should have down. That's our expectation, isn't it? All right? That's what we should have, isn't it? Okay, let's look at, where is it going? I want to zoom into this one. Hold on, please. No cheating, please. No cheating. We want to see the internal wave of the last portion of the price. Is it 5 waves? Okay, roughly, my friend. Look carefully. Will you agree that the price went down from here to here? So the average move is down, isn't it? Okay. All right. Will you agree also that the price went up all the way here? Okay. Let's move on. Okay. Will you agree that the price went down all the way here with quite volatile? Okay. And will you agree that it went back up again? Good. And will you agree that it came down like this? Yes. So how many waves we got? 1, 2, 3, 4, 5. So now we have 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Is that a flat correction? Yes. Those are the internal wave of a flat correction. So the question we are trying to answer now in this tutorial, which is a very, very important question, is that a corrective wave between the two vertical lines? Yes, it is a corrective wave. It was a corrective wave for the previous trend. The previous trend was from 1994 to 1999 for reinsurance group of AM, Epic RGA, Romeo Golf Alpha. After that bullish trend, a flat correction was developing, and we have the double retracement 1, 2, 3. 1, 2, 3, bringing the price to 138.2% Fibonacci extension level. Though we have a new high here, this is a part of the correction. So at that point in time, Elliott wave practitioners that have noticed that this is a flat correction, not a trending phase. So a lot of traders, I believe, at that point in time, will be thinking that if they were counting their wave, that they are in a third Elliott wave, that the price is going to go up more. It's just a correction still going on. So now you see the power of the 138.2% Fibonacci extension level. That for a bullish trend to become truly bullish, the price must break above the 138.2% Fibonacci extension level or the prior trend. In fact, if you are buying here, if you recognize the flat correction that was developing here, you can buy here and set your ultimate target here and your midpoint target somewhere here. Will you? Yes, you will. You will. Because you see the pattern being developing, you implement a top-down trading method here, and then you will monitor it, and your target, you see, on the dots. Position traders, swing traders, were creaming this stock reinsurance group of AM. From 2003, you see position traders, the open position from medium to long term. So 2003, 2004, 2005, 2006, 2007, 2008. All right? 5 years. All right? Okay, in fact, 6 years. Or they just, in fact, the thing ended in mid 2007. All right, mid 2007. All right, 5 years. Okay, or something like that. You see, they took profit. So buy and hold. The flat correction, the expanded flat correction can help traders to buy and hold if the fundamentals are solid. Okay, for a bullish stock. Or if the fundamentals are deteriorating for bearish stock. Okay, you can see here we have a bit of a surge in trading volume right here. If you pay attention to moving average 50 of the volume itself, you can see that, let's see, the average volume was around 5 million shares. And during that flat correction, we have a pop-up, a volume spike, propelling the volume to 12 million shares. Okay, so the volume has doubled. Okay, you see now? So now you see a flat correction it was developing. And now we have 1, 2, 3, 4, 5. Now the correction that has started, okay, at the beginning of 1999. Look, in 1999, can you believe it? That's a long time, man. Okay, 1999. Okay, has ended. All right, in 2009, 9 years. Okay, 9 years. Boom. Right? 9 years gone. It's a correction. All this for 9 years. Correcting this for 9 years. Look at the end of the correction. So this is what I'm talking about. If a pattern is being formed, or okay, that pattern is only that pattern until that pattern is formed. You remember that story? I always say in my videos. All right. So after the pattern is now completed, look what's happening here. A surge in trading volume. So we had this volume spike here. Okay, here this one, first one here. Those are sellers that were selling during the flat correction. So they see the first move down. It went to retest the top with this beautiful, gorgeous, bearish signal. Rally up to touch exactly this other top, displaying the kind of double top here. And pew down. Look at those are the sellers. All right, you see the average volume was in the zone of 13 million shares. A volume spike brought it to 37 million shares when the stock was retesting here. That's why we are talking about break below, retest, turn around. You are not the only person waiting for it. There are millions of traders out there waiting for break below, retest, turn around, implement a top-down trading method. So here it is, 37 million shares being transacted. Pure sharp correction, put it down. Vertical move down. Bounce up again. And then finish the lap in 5 ways. This is the C part of the flat correction. So this is the first one here. If I put another vertical line here, between the red and the black vertical line, we have the A part of the flat correction. Between this black vertical line and this one here, we have the B, a part of B for Bravo, B part of the flat correction. And between the black vertical line and this red line, we have the C part of the flat correction, which is subdivided into 5 ways. You can see that those waves are overlapping. This is not an impulsive wave because we have an Elliott wave violation indicating to us that this is not an impulsive wave. In this section here, the C part, though it's formed of 1, 2, 3, 4, 5 waves, is a correction. So, is that a corrective Elliott wave? Yes, it is a corrective Elliott wave. It is in fact a flat correction that has been prolonged since 1999 to 2009. The trending phase for this stock was from 1994 to 1999, but the price action between 1999 and 2009 is a corrective wave. Now we have a bullish trend that is in play. How do we know now this is a trending phase? Okay, let's do exactly the same thing that we did before. How do we know that this is, how can we confirm now that the price action that we have here is now a new cycle? Okay, how? Okay, you should know it now. Okay, you are now becoming a top Elliott wave trader. You should be able to know that now. Okay, so for a bullish trend to become truly bullish, you know, you see the theory. All right, we must always combine the Elliott wave Fibonacci. That bullish trend must exceed. Okay, all right, the 38.2% Fibonacci retracement level of the prior trend. Where is the prior trend? So a lot of traders, the mistake that they will make, they will say that the prior trend is this one. No, it's not. The prior trend is one. The prior trend is this one, still this one. Okay, this is the prior trend. And the corrective phase of that prior trend, we know it now, is up to this point. So the price action from here breaks above the 138.2% Fibonacci extension level of the prior trend. Now we know that's the level, 138.2%. That's the line here. Okay, so now we can see that this price action breaks above, okay, that this critical 138.2% Fibonacci retracement level, which it didn't break here. You see, it couldn't break it here. Now we are above it, which is good. Now we can talk about a new cycle now. It makes sense? It is also a powerful. We are the TSTW24 traders talking about, is that a corrective Elliott wave? Happy trading to you all and speak to you soon. If you have any comment, put in a comment section. Any suggestion, put in a comment section. In due course, I will record another video to answer your specific question. We are the TSTW24 traders answering a specific question. Is that a corrective Elliott wave? Yes, it is.